right, good morning, everyone. Frank, Rob, William. Hope everyone is doing well today. Friday, end of the week. Looking forward to the weekend here. All right. Shalom, Presser. All right. Morning. All right, very good. Okay, so what do I like to do here in these webinars is show you a couple of things here about what's happening in the trading world, show you the Atlas line. I have some updates for the Atlas line as well. I teach these methods in their entirety. I present webinars, and I have a mentorship program as well. Rob is just started here. Rob in the room just started. And so what I like to do is really concentrate on price, what is price doing, and then trade off of price. And so the goal is really to understand each step of the way how the market is acting and then react based on what price is doing. It's not complicated. I don't think trading should be complicated. I think trading, the easier you make it, the better it is. I've seen traders that have so many indicators on their charts that it looks like a fiesta. I don't know how else to put it. Where you have so many things going on. And take for example the Atlas line here on the E-mini S&P, right? Price is above the Atlas line. 1378.50 is the long entry. I'm long, right? I mean, I want to keep this simple. If you had moving averages, stochastic, MACD, Beltner bands, Keltner channels, 10,000 things, it comes to a point where you don't really know what's going on, right? So I'm trying to declutter the idea of trading and what we see with a very clean interpretation, all right? Right now, price is above the Atlas line. This is an entry, 1378.50. What's my profit target? I look down here at 2 points, 2.25 points. That's what I can expect out of the market. And therefore, if you look at about 2 points from this entry, 78.50, 79.50, 80.50, and it's exactly where price traded to. So you can see that I am using just the price and the tools available as a trader to dictate how I react. Okay? If I wanted 10 points or 4 points, it may never get there. And I'm taking that out of the equation. All right? One other thing that I want everyone to know is that the markets are definitely manipulated. Okay? You may think that it's random. You may think that what we see here, let me take a look at the Australian dollar here, long Australian dollar. You may think that the market is random and that everyone has a fair shake, and it's not true. Okay, what we have is a complete manipulation each and every day of large money moving and pushing the market up or down as they see fit. Okay, so when I think about why did the market turn around on a dime, it's not coincidental. It is, or random. It is for a specific reason. And this is very important. Okay. Now, I'm going to bring up here a dome. I'm going to show you something. And where's my E-mini dome here? Give me a moment. Okay. So you look at this E-mini dome here. Right here. And I put this out of the way like this. And one of the things that a lot of traders try to do is interpret these orders right here. Okay. Now, when I think about these orders here, you may say to yourself, well, there's 1,000, there's 1,000, there's 1,400, right? This means something. Okay. And so there's a lot of programs that they consider tape reading very important. Okay, very important. And I have to say that in the 50s and 60s and 70s, when all traders did were look at the print and the tape, that definitely you can say to yourself, well, there's lots of stops. There's, a lot of contracts here trying to be filled. It would mean something. But now in this electronic trading age that we have, almost everything now is based off electronic trading. And I think that everything is going to move from being in a pit to being electronic. And you can see how the dwindling numbers of floor traders are becoming more apparent. These numbers now are no longer valid. Okay, the numbers that you see here, yes, there may be 1,000 or 300 trying to be filled, but how it used to be traded and used is completely different. Okay, we used to look at these numbers and they used to mean something, and nowadays if you try to incorporate or say to yourself, I'm going to look at this and determine what to do, it's not going to work. And I'm going to explain to you why. All right. With electronic trading, we have a situation where you can place an order and you can take off an order within a second, right? A long time ago, when electronic trading wasn't as prevalent as today, you would have to call your broker and it would take minutes for somebody to run the order, execute it, get a ticket, report back, and so forth. So with the ease of putting on trades and taking trades off, it is so simple for someone to add 1,000 contracts here, and as soon as price comes to that number, remove the 1,000 contracts. Now someone isn't you and I, because we can't put on 1,000 contracts. First we have to have a large enough account to even be able to do that. All right? But in the real world, you do have institutions that are able to put 500, 1,000, whatever they want, because they have a large enough bankroll for the orders to be accepted. So when you think about that, think about how you may have at some specific number a huge number of contracts. A huge number of contracts. Let's say it's 3,000 or 4,000. And you say to yourself, well, there's no way that that price is going to absorb that 3,000 or 4,000 lot waiting at that price. And so you also place a stop, maybe just above it, or you're looking to get in at that price, or whatever the case may be. You're reflecting that. You're actually interpreting that as something significant. As soon as price comes up to that value, you're going to see that number disappear. And what this is called is phantom orders. Okay? What you see here on the left and right, some of it may be representative of what's really happening, but some of it is also not. And therefore, if you ever see large numbers sitting, for example, I see here 2,000 at 1376. If you ever see those large numbers there, just watch it. You're going to realize as price comes very close to that number, within a tick, that 2,000 or 3,000 just disappears to turn into 500 or 300, whatever the case may be. But that is going to happen all the time. And so phantom orders are a big problem, because when I talk to traders, this is one of the things that they ask me. They say, can I do anything with the print here as you see it? And the answer is no. Okay? Think of this as a complete fabrication of what's actually happening. All right? And if you trust it, you're going to have a stop, or you're going to think that there's no way the market can blow through that, and you're going to see it blow right through it. I also think that there are, based that on that manipulation, that manipulated market type of environment, you're going to come to the conclusion that many traders look at these values as a place to be safe. And if the large money puts in huge numbers there just to lure you in, you're going to get lured into it, and you're going to believe that it's never going to penetrate that level, and it's going to go through it because that's exactly what they want. They want you to believe that that's not going to, it's going to hold, price is going to hold there, and it's going to blow right through it. So don't ever use this in these values that you see here, orders pending on the left and right side here for sells and for buys, people waiting to be filled, as an actual representation of what is happening. All right? Questions, guys, on that? All right, very good. Faisal, good morning. All right, very good. All right. Now, one of the things that, let me just put this out of the way here. One of the things that I look at is where traders put their values or their stops. Big deal. It's a big deal. You know why, guys? Because you have a tendency to use the same exact values as the trader next to you when it comes to stops and profits. Okay, here's the crude oil here. Actually, I have to change this here. Crude oil is actually at 9 o'clock. It starts. So crude oil starts at 9 o'clock, and that's for me Eastern Standard. Okay. Now, think about where most traders place their values, their stops, their profits. They usually place their stops on even numbers. And it may be a psychological thing. And I talk about this all the time. They don't place, and I'm not saying anyone here in the room, I'm just saying that most traders, when they think of a safe bet, they think of 1200, 1300, 1250, right? This is really, in my opinion, you're putting your stops where everyone else is putting their stops, not where it makes sense. So when I think about stops and I think about where to do or what to do, I always think about a prove it stop or a pivotal stop or a time-based stop. I always think of things that will take completely out of the equation a value that everyone else is using, okay? And that's how you have to think as a trader. Not, let me put the stop at this round whole number, this nice sounding whole number, because everyone else is there as well. And price will go to it, take everybody out, and then you're going to get stopped out. It's going to happen. Not all the time, but I would expect most of the time prices do go to an even number and then reverse and turn around off of it. Okay, so this manipulated game that occurs every day, be aware of it. Try not to place your stops at even numbers. Take a look here at an E-mini chart. Where do you think most traders have stops? 1380, right? And look what happened. It hit 1380, even number, bounced off of it. It's typical. It's typical. I mean, I could give you a ton of examples that, it's hitting a resistance because everything else was resistance before it, and so forth. But it's an even number, all right? And so try to avoid that. Try to avoid putting your stops on even numbers, all right? All right. E-mini, Atlas line. Oh, I do have an update. Atlas line, those of you who have the Atlas line, Bob, good morning. Those of you who have the Atlas line, lifetime or the 6-month package, I have an update for you. I provide free updates. And so I've updated the Atlas line. Nothing's really changed on the calculation or anything like that. But I do teach the pullback and the strength trades. And I always taught them manually because I do them manually. And so now I've incorporated doing them automatically, where you see here SSS for strength, here SSS for strength, and so forth. This is just that there. This is telling you when you should go long or short based on how I do it manually, the pullback and strength trades, and now they're going to be added to the chart. So as soon as the coder sends me the final version, I will send everyone an update for the Atlas line code, which will have now the pullback and strength trades to go long or short after the initial double bar long or double bar short. If it continues, we're going to get in again. All right. So give it about a week or so, and I will send everyone who has the Atlas line a free update. All right. This is overnight yesterday. Here is the 18th, 2 days ago. Strength, short, long. Here's overnight on the E-mini. All right. All right. So what do we have going on this morning? Those of you who trade currencies, Australian dollar is an excellent market. The euro is a good market. Sometimes it gets a little crazy, but it's a good market. E-mini is a good market. I like the E-mini. Crude oil, you know that the crude is dangerous. Dangerous market, the crude oil. So if you have stomach for it, because it can move on a whim, then you absolutely have opportunity to make a lot of money, but just be careful with it. Lou, my favorite is the E-mini, only because I've almost, I don't want to say mastered the E-mini, but I understand what happens. I understand the manipulation. I don't just use the Atlas line of the E-mini. I use the roadmap. I use the X5. So the E-mini is a market that, even though it's slow, I can understand it. Take a market like crude oil or gold. You have so many manipulative factors that get thrown into the crude that it could turn around and swing for no reason. So my favorite's the E-mini. The Japanese yen is a market that I personally do not like to trade. There's a lot of gaps in the Japanese yen, and therefore when I see those big gaps and big swings, it becomes very difficult to trade. Okay, Lou? So my personal favorite is the E-mini. Okay? Top three is the Euro Stoxx 50, the E-mini, and the FTSE. And I would say the Australian dollar I like as well. Okay, it's top three. You're welcome. All right, so it says here JPSI. I don't know your name, but it says here we have a class talk about how to use the S and the P for existing members. Yes, if you have, do you have the Atlas line? JP and SI. What's your name, by the way? Okay. Okay. If you have the lifetime license, remember we have a how-to webinar, right? With everyone. Okay, Jatinder. We have a how-to webinar with everyone who gets the Atlas line, right? And do you remember the support and the pullback and the strength trades? Do you remember how they work, Jatinder? So what you see here on a strength trade and pullback trade is now, instead of doing it manually, we're going to look at it in with it being just popping up for you automatically. So you see here, the strength trade, right? This is a long right here, right? Based on the strength trade rules I gave you. And that's a point trade, right? Because the strength trades are just a point. So remember the rules. It's a 3-bar candle or 3-bar pattern for strength. Just price, 79.50, 80.50, and that's the point for the strength trade. Remember that, Jatinder? Okay. And P is for pullback. So let me see if I find here a P for pullback. Okay, so right there is the pullback trade. Right there. Another pullback right there. Strength. Strength. All right, Jatinder. Pullback there. Okay. All right, very good. All right. Pullbacks are just 1 point, Lou. That's right. For the pullback, it's just a 1 point move. Correct. All right. What are markets that you guys trade? Well, most traders trade what I have. If there's a market that you want to take a look at, I'll be happy to put it up. But most traders trade what we see here. The euro, Australian dollar, the E-mini, crude or gold. Let me take a look at the E-mini. What's the E-mini doing? Okay, so I have here the major markets that most traders look at, and this is what we're doing on the Atlas line. The back end of the Atlas line, just to show you, has no optimization. So you can have an alert wave file. You can see where you want the text to be plotted. You just put in whatever time that market opens for you in your time zone, and then you just turn on or off the signals. There's no value attached to it, and therefore, as a benefit to a trader, you don't have to go crazy looking for the optimal time for that specific market. And as most indicators, you have to look at and optimize things. There's no optimization. It does the calculation automatically for you. And I think this is a big benefit. It's a big plus as a trader, because there's no optimization back that you have to back test and to find that optimal value. Okay. Pullback, William, is not a short trade. Okay, pullback is not a short trade. What a pullback is when we have the initial double bar long or double bar short. So for example, here in the E-mini, just to give you an example, the initial double bar long or short presented itself. After this trade is finished, and if the market continues higher in a trend, then these strength or pullback trades are going to occur. And because we are above the Atlas line, the bias is going to be to the long side. All right? And therefore, I'm only going to take long trades. The long trades are going to be based off of the pullbacks or market pulling back. And long trades are going to be also taken based off of strength. So whether the market pulls back or whether the market shows me strength, as long as we're above the Atlas line, I'm going to continue to take long trades, right? So and we know this ahead of time, we have plenty of advanced notice. And this isn't black box at all. I teach this. I want to show you guys how these patterns work. So what is a pullback? A pullback is when we have at least 2 consecutive bars pulling back, right? So for a pullback, let me just put this out of the way here. For a pullback, we have to identify what a pullback is. It just can't be like, well, it looks like it's pulling back. It's not the way it works. Let's give it a specific rule. So for a pullback trade, we have to have at least 2 candles pulling back. So now really what does that mean? Does that mean that we're looking at 2 red bars, 2 dojis? What does a pullback mean? Lower lows, lower closes. So I'm going to keep this as simple as I can make it. All right? As simple as I can make it is going to be 2 consecutive bars pulling back, 2 red bars. We are above the Atlas line. So 2 red bars, to me, equals a pullback. keeping it very simple, right? So if you see 2 consecutive red bars, it can be more, it could be 3, 4, 5, it is considered a pullback. All right, so I've identified a pullback. We have 2 red bars. It could be 3, it could be 4, it could be 5, but we have 2. All right, I know I want to go long. Where do I go long? Well, with proof, okay? So it doesn't matter, Lou, how many. It can be 10, doesn't matter. But you just need 2 to start off the trade. So once I have 2 red bars pulling back, I'm going to consider that a pullback, and then now I want my proof to go long. To go long, I want to say, show me where to go long by the first green bar. Okay? After the pullback, I want to see the first green bar. At the close of the green bar, I'm going long. So everyone who has the Atlas line, I teach this manually. I show you, look for it manually. But now that I've updated the Atlas line, this will automatically be plotted for you by these S's showing you strength, or P for pullbacks. Okay? Hey Nathan, can you hear me okay? All right, very good. All right, so now that I've identified a pullback, I know where to go long. It's just a matter of waiting for the price to do its thing and to show me. All right, so let's take a look here at pullbacks, strength, 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 pullback. Okay, 2 consecutive green bars. I've identified a pullback. The first bar that closes red, I'm going short. That's a pullback. Right? Here's another one. Let's see if I find another one here. I'm just going back in history. Strength, strength. Here's a pullback. 1, 2, 3. The first green bar, I'm long. Okay, that's a pullback. 1, 2, 3. Here's a long. That's a pullback. So do you see how just by trading the price, I look for a minimum of 2 consecutive bars. I look for the first green bar, and I'm long. Okay, that's what the P stands for, and that's what's been added to the Atlas line. Instead of you doing it manually as I showed you, you can have now a heads up when it's happening. And I'm going to have these bars maybe painted so they turn different colors. I'm still working on that, but I think that by the end of next week, I'll have it completely finished, and everyone who has the Atlas line gets a free update. All right. William says here, if an S appears, do we enter at that candle? For strength, yes. Jeff says here, what if there is a red bar, then a doji, then a red bar? Is that considered a pullback? No, it has to be, Jeff, two consecutive red bars. Okay, two consecutive red bars. 2 consecutive red bars. That's the first definition. They have got to be consecutive. And then show me the proof that we're going back up. You know, if the market's in a trend, and it's going higher and higher and higher, you're going to get these strength trades and pullback trades. The idea is to catch them and know when they occur. And as long as I know that I should be above the Atlas line to go long or below the Atlas line to go short, that really makes the odds in finding the right direction that much easier. All right. Another example here. Pullback here. Another example. strength, strength, pullback. Here's a pullback here. 2 consecutive red bars, first green. 2 consecutive pullbacks, first green. 2 consecutive pullbacks, first green. And on and on and on. All right. Let's take a look at what's happening here. E-mini, E-mini, E-mini. So far, so good, right? I'm asking a very simple question now. Is there a reason for me to go short? Or is price below the Atlas line? Nope. So let's use a little bit of help in knowing the direction. The Atlas line is where it is. Price is above it. And I know that I'm thinking about long trades at the moment. Okay. Great question. Victor, he says here, you're welcome, Jeff. Stops. Okay. Stops that I use, they're called prove it stops. And I'm sorry, pivotal stops. I incorporate multiple stops or stop strategies on a market only because I don't think one stop fits all category is the right thing to do. Okay. Stops are very important. Entries are important. Okay. Direction is important. All these things are important. But stops, if you have too large of a stop, it can hurt you. If you have too tight of a stop, I think it could be even more detrimental to a trader. Most traders like to keep tight stops. I agree that I don't want to risk 10 points to make 1 point. That doesn't make any sense. But the stops that are implemented have to at least have some type of common sense. Easier said than done, right? What you think that the even number or just above the even number is going to be the perfect ideal place to put your stop, and then you see price hit that even number and turn around. So let's think about this in a different fashion, okay? If you have a stop and the stop is not based off of the price or what's happening, then you're just arbitrarily putting a stop there. So let us instead use a specific stop, whether it be a time-based stop, a prove-it stop, a pivotal stop, all these stops that I teach. Let's put it where it makes sense for the specific trade that is occurring. Okay. Okay. So what do I mean by that? I mean that if you're going long here based on a strength trade, right there, to close that candle, it's a long trade. If you're going long here, the stop has to reflect this specific trade. You can't say, you know, I'm going to put my stop 2 ticks or 1 point from my entry, or I'm going to place a stop, you know, based off of a moving average, or it going below 0 on momentum, whatever the case may be. You have to incorporate what just happened to go long to tell you where the stop is. So I'm going long for a specific reason. If I'm wrong on this trade, it's because I need, because the proof of price continuing higher is not happening. And I need some type of proof to show me that. So what do I do? Well, do you see that this, let me go to actually the stop is just below this candle here, because this is the lowest or 2 ticks below the lowest low of the pattern. If you take a look at a pullback trade, the same thing here. You see this? This is a strength trade here. I'm taking this long on strength. I'm using the pattern to tell me to go long, but if it fails, I should use that same pattern as a pivotal point to get out of the trade. So 2 ticks below the lowest low here of these 3 bars is my prove it stop, or I'm sorry, pivotal stop. Prove it stop, pivotal stop. Pivot stop I use for the power price action trades, but pivotal stop I use for this. Let me show you a pullback example here. Okay, here's a pivotal stop for a pullback trade. 2 ticks above these 3 bars is right here. This is a failed trade. This is a pullback trade, right? We have 3 bars pulling back. We're below the Atlas line. I'm going short right there. This is exactly what it looks like live, just like this. Okay? I know exactly where my pivotal point is to turn this market back around. If this is wrong, I'm going to use the same 3 bars to help me exit the trade. And I'm out right there. Okay? Let's take a look at another example. Here's a strength trade to go short right there. Right here is my pivotal stop to get me out of the trade. If this turns around, there's no reason why I should be in there. This is a pivot. Okay. Let me show you an example of a pullback, another pullback. Pullback strength to go along there. Here's my stop. Long, long, pullback. Pullback. So here's a pullback. I'm short there. Here is my pivotal stop. All right. So you have to use, and this is one of the stops that I use. Let me see. Strength trade, pullback trade here, PPP. Here's my pivotal stop right there. Simple, doesn't have to be complicated. It just has to make sense. Just has to make sense. Look at this trade here overnight on the E-mini. Price is pulling back. Tells me I should go long. I'm long. Close this bar. Period. The lowest low of these 3 bars is this candle. 2 ticks below that. If I'm wrong, I'm out. Never got hit. Turned around. So use what's available to you, which is the price and the chart and everything that you see in front of you to your advantage. I personally don't use any moving averages or any indicators. Those of you who are mentorship students that are in the room here, Nathan Mills here. I'm not sure if you have the audio fixed, but if you want to give a little feedback to everyone here in the room, any moving averages or anything like that I use in the mentorship program. And by the way, the next class is starting in May 2nd. Now that tax season is over, I'm glad that's finished. Tax season is done. I have a new class starting on May 2nd. I think it's May 2nd. Chad, it's May 2nd that the new class is starting? Yeah, check it out. I think it's May 2nd. And those of you who are interested, the mentorship program includes the Atlas line, includes all of the programs that I offer. It's one complete package, and it's an excellent way to get everything for 8 weeks with me. It's all recorded. Right, you got it. Yeah, right, Nate. Thank you, Nathan. Victor's, looks like stops are greater than profit targets. Yes, they are. Without a doubt, Victor, my stops aren't and my profit targets are not one-to-one. You just, in my opinion, can't look for a 1-point stop when trading the E-mini S&P. Sometimes you can, but for the most part, it's not going to happen. You need to give this, in any market really, room to breathe. It's got to have room to breathe. The ratio has to be high, I agree. You have to be very accurate, and everything that I do is black and white. So I want to take the subjectivity out of trading. I want to be objective. These are exact numbers. That's why I post them here, 78.50. Close of this candle is the entry, right? Everything is exact. So there's no looks like or could be. I try to make everything to trading specific. All right. Any questions, guys? Okay, so that's the E-mini, S&P, Euro. This is the Euro here. Those of you who trade Euro, double bar long at 31.97 right here, and you're out. Remember the definition of a pullback trade that I gave you? Here we go. What do you think, guys? Is that a pullback? We have 1, 2. 1, 2. Right? So I just need 2. We have 3. That's fine. The first green bar that tells me I should go long. I'm long. Close this candle. Where is my stop? Those of you who are asking about stops, just under, a couple ticks under this. Because what this is a pivot. Like that. And if I'm wrong and this thing comes down, I'm out. So I call it a pivotal stop. Simple, extremely effective. Okay? Yes, I do offer evening classes, Lou. You email me and or call me, and we can discuss the best, either one-on-one or class to do for evening classes. So those of you who have or can't attend, or in international that can't do mornings, early mornings, I offer evening classes as well. All right. Okay, so that's the euro. What else do we have here? Australian dollar, right? Strength trade on the Australian dollar here to go long. What else do we have here? Long on the Australian dollar here. Crude oil, not my favorite market, but shows you the pullback and the strength trades here, and so on and so on. Russell? Sure. Show you the Russell as well, Anthony. If I missed any questions that you may have, please post them again. I'm trying to keep up with the questions, but is there anything I missed? It's not because I'm avoiding any questions. It's just I'm trying to catch everything that I see here. Russell, all right. Let's go to the Russell here. While it loads some data. Okay, here's the Russell. Who asked for it? Anthony. Okay, so double bar long right here on the Russell. Okay, so here is the long trade on the Russell. There's no stop. A stop on the Atlas line is a close on the opposite side. That's the first stop that it gets implemented. And I look at the ATR, looking at about 1.25 point here, based on the current market conditions, and that was easily hit right there. And then you have this here, here, and here. Now, this would not be considered a pullback under these conditions, because you see how this candle here closed below the Atlas line, and therefore it resets it. So if we have a candle that closes below the Atlas line, the software resets itself. So it would not be considered a continuation of this original long, double bar long, and that's why you don't see the P's. But right after that, since it resets itself, it gives you another 1, 2 double bar long to go long right here. So really, the entry would have been exactly the same, but you would have to wait for confirmation or proof that we're going up. I wouldn't want to take this long based on a pullback because this first reset itself, and this may continue now and give you a short. So the software does reset itself, and that's why you have here another double bar long. And there you go. Okay, now we have a true and valid pullback trade. We have 1, 2, was it Anthony? Anthony. And then the first green bar, I'm long. Okay. Well, anyone who has the Atlas line will get an upgrade within a week. And if you purchase the Atlas line, you're going to get it right away. So everyone who has it will get it in a week. Those of you who are going to purchase it, you get it right away. Let me see here. Can you set? Let me see here. Sorry, it came in late. No problem. Anthony, can you set open to 9:30? Oh, it's not. I'm sorry. Is it not set to 9:30? It's not set to, because I had the. You're right, because I had it on the crude. All right. All right. So my apologies, Anthony. So here is the crude oil, the euro, the Russell. All right. Okay. Long, pullback, long, 2 good trades, strength trade, long. So you have 1, you have 2, you have 3 successful trades on the Russell. How's that, Lou? Or Anthony? I'm sorry, Anthony. All right, if you're interested in getting the Atlas line, remember this updated version here is going to be sent out to everyone who has it lifetime or the 6 months, and as well as it will be given to any new buyer as well. I'm going to give you a coupon, save a little money, 10% off. 10% off the Atlas line by using the coupon code 10OFFATLAS right there. I think it was in this week's newsletter. I try to do a newsletter every week, and I think that same code is in the newsletter. So 10OFFATLAS is a 10% off the Atlas line, whether it be a lifetime or a 6 month. E-mini. Somebody had a question here about E-mini. Is E-mini showing a reversal now? Let's take a look at the E-mini. It is. Well, I'm not yet, but I mean, it may be a pullback, right? Not really a reversal, maybe a pullback. So, who asked the question? William. So what is the rule for a pullback? William, if you remember. If not, I'll go over it again. Or anyone here who remembers what the, right. A minimum of 2 red bars. So if you have 2 red bars post, and then any time after that, it could be 3, 4, 5 red bars, and then it could be a couple of dojis. Doesn't matter. Let's keep it simple. 2 red bars show me that it's pulling back, and then the first green bar that reintroduces us to this trend is still good. We're continuing to go long. I'm long at that point, the close of that bar. Okay, very good. That's right, exactly. May 2nd. Okay, so May 2nd is the new mentorship program for the next 8 weeks starting. It includes all the courses. I encourage you to learn the entire package as a complete method and system to trade. The Atlas line is fantastic if you want to use it and incorporate it in your trading style, but really there's so much manipulation that occurs in the market, and I teach, for example, the roadmap trades and the X5 trades that is really the best way to go about a trading career. I don't have that, Lou. I don't have that, but I don't have a rule, like a set of rules. Let me see who asked that question. I don't have that set of rules as handouts and things like that, but I do record a private webinar which you have access to. So, if you want to attend another session, Atlas Line training session, just send me an email, and I'll be happy to invite you. You get a recording, another recording with it, and so forth. All right. Sure, I do. Absolutely, William. Absolutely. Okay. All right, guys. I have actually a meeting I have to go to at 11 o'clock, so I'm going to head out of here. I just wanted to show you guys the Atlas Line at work for today. Today is a beautiful day on the E-mini and some other markets. As you can see, this is a pullback. If this candle is green, I would consider it a valid pullback trade, and it'll be an opportunity to go long. I only take a point on these pullbacks. I don't go gung-ho like I do with the ATR on the original double bar short. There was a question about a bounce trade here. I forgot who asked me. Sorry if I missed that. I just remembered it. I have so many trades. I have it set to false. I'm going to turn it on right now. And this is a bounce trade here, right over here. Let me see here. It's not turning on. Why is it turning on? Just take a look here. I have a lot of trades that I look at, and so bounce trades is just one more aspect that we can use. I have to turn on the original Atlas Line here and turn on bounce trades. Let's see. Yeah, this is there. There it is here. This is a bounce trade right here. It should be turned on, and because it's bouncing off the Atlas Line, I'm not sure why it's not on, but this is a bounce trade. I have so many trades that I look at. I mean, there's so many that I look at that the bounce trade is kind of one that I put on the bottom of my list, but it's still valid. I keep it off. I forgot who asked that. I keep it off because I don't want to clutter my chart with all these trades and things like that. So I keep it off only because I want to keep a clean chart. That's really the reality. That's really the reality. Okay. Nathan, you still in the room? Nathan Mills here. You're welcome, William. Roadmap for today. I'm gonna, there are a couple of people that are mentorship students. I do have an update for you on the roadmap. You want to see it, William? I'm sorry, Nate. I got too many. Okay, I'm gonna send it to you because as a part of a mentorship program, any software that I have, that I create, I give to you for free, right? Anything that can help us as traders, I provide for free. So, especially if you're part of the mentorship program, I'm going to show you this. Just give me a second here. Hold on a second, Nate. Let me just get it here. You got it, Jeff. All right, that's it. All right, so let me show you what I have here for you. So if you are, I have a lot of people here in the room, but I have here I'm going to remove the Atlas Line here. Okay, this is nice and clean, right? Nice and clean. Roadmap is one of the things that I use. I think it's extremely accurate, and it's, believe it or not, guys, it's just pure manipulation. So I teach this, and I decided to create an indicator, and I just got it finished, actually. So I'm going to give it to you. Nate, All right. So, what do you think? Is that right on key, Nathan? To go short right there based on the roadmap? Yeah, right? So what this is, guys, is just a pure manipulated move that occurs every day, day in and day out. And I just got it coded where it tells you at this point the market's going to hit some type of huge resistance, and you can go short, you can stay out of long trades. This is it right here. It's really the only thing that you can bank on. All right? So I'll send it to you, Nate. It does. It triggers B, C, and D automatically. Yep, it does. See? B, C, and D automatically. It's not included with the Atlas line. It's only included with the mentorship program, Will. All right, so those of you in the room that you got it, Nate. Those of you who are in the room mentorship program, I'm going to send this to you guys. All right. All right, guys. Have a great day. I got to run. I have a meeting I have to get to. Email me if you have any questions. May 2nd, the class starts. If you want a night session, or if you need to, because you have other obligations during the day, I do have night classes as well. It's 8 weeks with me, special price because it's a class. Send me an email, and I'll be happy to accommodate what I can with the hours. All right. All right, guys. Have a good day now. Bye-bye now.